Hey everybody, this is Jose Blasco. We are about to start. We are 30 seconds away from the beginning part of the session. Sound check, please. Please go ahead and type a quick message on the chat box. Just a quick hello would do, so I know that you hear me well, sound is good, and we are ready to go. Thank you so much. 10 seconds. Very good. We just reached the top of the hour. I thank you very much for those messages. Just one little second here, and we'll be ready. Here we go. How are you, my friends? Good to see you, everyone. Welcome to the session. Today is May 28, 2020. We're getting together to talk about longer-term trading. So we're going to be looking at options opportunities, directional and non-directional both. We'll be putting it all together and identifying those market opportunities. And as long as they meet our rules, we'll be ready to execute. And if not, we'll just keep looking until we find opportunities that do meet our rules. That's the plan, as always. Boyan, how are you, my friend? Good to see you. Avenex, good to see you. Ahmed, Fermon, good to see you all. Ruben, good to see you. Gali, good to see you, everybody. Very nice to have the session on the Thursday and talk a little bit about options. You guys know I love options, so I'm excited for the session today. Disclaimer, I'll read the disclaimer for you, and that way the session is officially introduced and we begin. So let's go for the disclaimer. Disclaimers: the following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through demonstration do not indicate in any way the results you may receive on using our products. That's the introduction. The session is now official. We are on, and it's time to move from the introduction slide into TradeStation so we can begin our planning of the trades. Okay, here we go. Here is TradeStation. Very good. Let me see, just checking the chat box one more time. How are you, Charles? Ahmed, how are you? Mark? Very nice, everybody. So let's go for it. So let's begin our application today. And as always, we're going to start the day looking at the scanner. For the ones of you newer in the sessions, on the top of the scanner here, we have directional up arrow, directional down arrow. This means that the scanner at that time, the scanner is looking for directional opportunities. And from an options point of view, those are debit trades, where on the bottom part of the scanner, we have, notice the word credit. Okay, we have the word credit instead of the word debit right there, isn't it? So three types of opportunities. They are all credit. Okay, they are all credit. But notice how the one on the top is purely non-directional, where the two below, okay, the two below are neutral, up arrow, neutral, down arrow. Okay, so neutral long, neutral short. In other words, another way to say that is the neutral opportunities would be credit spreads, where the non-directional opportunities would be iron condors, and the directional opportunities would be either long calls or long puts, or debit spreads, either bull call spreads or bull put spreads, depending on the direction that we play. Okay. Now the scanner has identified a collection of opportunities for us already before the day starts, I run the scanner before and I have a collection of opportunities. We got directional long, directional short, and non-directional. We have a few. So we'll start with non-directional, see if those trades line up with our rules, and if not, we'll then move into directional and keep looking for opportunities. If both non-directional and directional fail, then priority number 3 would be to move into neutral opportunities. I will leave neutral for the last. I'm not saying it's wrong to do neutral. I'm just saying you get less credit than non-directional opportunities such as iron condors. So I'll start from there because it seems to be more advantageous, at least if you're going to treat it in a completely passive manner. Okay. So we'll start there. Dian, how are you? Lilan, good to see you. Very good. Wonderful, everybody. So let's begin. Let's sort those stocks based on the price. On the top, we have Costco. So let's load Costco. And while Costco is loading, I am also going to check the next earnings date for Costco, which is the last one is reported as 28th of May, which is today. And therefore, that is an automatic no-go for Costco. So we are not going to touch that stock given the fact that earnings are being reported as we speak. Okay, so we're going to move into the next one, Broadcom, AVGO. Okay, so earnings are happening when? It seems that we have a few days. Let's see how many until 5 of June. Okay, 5 of June for AVGO. So let's take a look at when is 5 of June, which is happening next Friday. Okay, so that's not a good news because basically, ideally, you always use like a week over expiration. And I say that's ideal, not because it's ideal, but because if you are forced to use the next Friday, being Thursday today, that only gives us like 1 day and a half of time to expiration. And it is ideal from the point of view of the efficiency of the time decay, but it is not ideal from the point of view that we almost get a no-go when we plan those trades where the earnings date, the expiration dates is so close. So the fact that we cannot use June 5 because it's the earnings date, it's a problem, but we're still gonna give it a try using May 29 to see if that works. Okay. Now, all of this is assuming we're going to get probabilities of 48% and above, which right now, when looking at regular session data, we get 44. That's not good. So I'm going to move into pre and post market, and now we get 49. Okay, so now I'm okay. Okay, but I was about to maybe conclude that this trade was not going to be a good one. Okay, but yes, in the end, we ended up having more than 48. So from that point of view, we are okay. Okay, so now I want to know where is that stock at. Okay, so if we were to load data starting February, okay, I need to see that we have on-field orders above. Okay, so first date, let's load data starting February 2020. Okay, so we do have UFOs above. Okay, but guys, we're not gonna take the trade, and now I got two reasons. Reason number one, when I added more data, probabilities got distorted. Okay, I don't see it as a big problem because the fact that I add more data and probability are worse means that with less data, probabilities are better. And this is telling me that the closer to the present we are, the more the institutional interest. So I'm okay with what I saw earlier. I would still be keen to take the trade. But the problem, and the second reason why I was saying that, it's going to be a no-go, is because one of the rules we use is that we need at least two UFOs to defend ourselves. And notice the huge, massive vertical distance between those UFOs. So in other words, if I was to sell options above 315, okay, probably we're going to check, okay? So we do the whole process, but probably the premium I'm going to get paid for options that expire tomorrow with a 315 strike, even though that's a $286 stock, which is, it's not a cheap stock, it's not a low price point stock, but still, I believe that the amount of premium I'm gonna get paid is gonna be probably disappointing. Okay, so loading Broadcom, AVGO. Here we go, and now we're gonna be looking at May 29, looking at the 315 strike. Okay, and yeah, I mean, theoretically, we got 155, but the reality is that look at the liquidity of those options 0 to 310, 0 to 005. I mean, that's amazing. Okay, you buy if you were to manage to buy the 310 for 5 cents and sell the 315 at 310, you got free money there. Is no way it's gonna happen. Is absolute no way it's gonna happen. So we are not gonna be able to do this trade, with May 29 expiration, which is tomorrow. Which unfortunately that was um, my view when earlier I commented on the problem attached to using tomorrow expiration date. It's always worth it to check though, because if it does work, it means that the options prices are very, very high, and then you are in an even more advantageous position. Okay, but we're gonna have to move into the next stop, which is ECL. Notice, by the way, I skipped the QQQ, and the reason why I skip it is because it's an ETF. So normally premiums are always less. Okay, so I skip it. I'm about to check earnings, but also I can see here a 44%. So that doesn't make me happy. Let's move from pre-post market to regular session and see what happens. Now we got 50%. So then I'm fine with that. Let me see the bigger picture of that stock. Well, wow, that stock, I don't think we're going to be able to do it. Yeah, we won't be able to do it because no matter the earnings date, that stock is about to make all times high. Okay, that stock is about to make all times high, and if the stock makes all times highs, or is about to make all times high, no matter what, if I scroll the prices down, notice how there is no red UFOs. Therefore, I would certainly later on maybe look on a neutral long trade, but a pure non-directional trade where you need two UFOs above, two UFOs below, that is not possible. Okay, so I'll skip that one and come back in a minute. Okay, I have a few comments here, so let me go ahead and read your comments. Mark, do you run the scanner during US market hours or outside the US market hours? I run it normally before the market opens, Mark. So that was a few hours ago. You may have different results because if you run it now, you may get different results. But I did run it before the market opens. Ruben, I was with AVGO, if I look in higher time frame daily, you get more than 50%. Could I use this to find opportunities to sell credit spreads using longer times, 3 to 6 weeks? Yes, you could certainly can. You could certainly do that. Again, if you were to apply a different time frame and then you apply the calculation we do on the simulation, right, where you calculate what is your one standard deviation, and on a larger time frame with a greater probability you still get two UFOs, okay, in each side of the iron condor, then yes. Now, if you tell me that because it's the daily time frame you only got one UFO, even though the probability is the same or more, then you are breaking the rule. The rule is to have at least two UFOs. So that normally is difficult to achieve when you go to a higher time frame, even though sometimes it may work. Okay, so if that's the case, that's a good suggestion, and certainly it's valid. Okay, so we'll move to Baidu now, which is the last stock for a potentially non-directional trade. Notice I skipped IEF. IEF is another ETF. Okay, so I skip it. With Baidu, we got 45%. With a regular session, if I look at pre-post market, that becomes 47. So notice that with Baidu, we don't get 48, which is our minimum, and therefore I'm not gonna make up a trade out of breaking the rules. We just don't do that. Okay, so I'm just gonna say no to it, even though it's a bit of a shame because it was 47, 48%. It's almost 48, but it's not 48. So it's black or white. This is the mentality and the mindset of a trader. We take it or we leave it. We don't improvise or make excuses or stories. Okay. Anyway, so what I'm going to do is I'm just going to click on the run button. So this scanner reruns. And while this particular scanner reruns, I'm just going to go ahead and move into my directional opportunities. We have a pretty long list here. So I'm going to sort this based on the price. And we're going to start with Home Depot to see what is possible. I mean, the S&P, maybe I should have started by looking at the S&P. Let's do that. So you get my point. So let's do that. Changing symbol to SPY. Okay. Here we go. So here is SPY. And the point I was going to make is that from a climate point of view, even though we're still okay, right? Because it's blue confirmed climate, candle number 8 out of 10. So in a theory world, markets should continue going higher today and 2 more days. So the market, based on probabilities, is likely going to continue. Okay, nothing against that. But at the same time, while the S&P is doing that, sure it is that the stocks that are the strongest stocks in the market, probably they started moving higher sooner. And probably this list of stocks that we have from the scanner is long. And one of the reasons why it's long is because probably we're going to have a lot of stocks that are a bit overextended, and there will be a no. Okay, there will be a no go. Okay, and if that's the case, it's okay. We'll just give it a no go, and that's it. Okay, so looking at Home Depot to begin with. And wow, what a great example of what I just said. I mean, that's a massive example of what I just said. Okay, what an incredible move. Okay, so 36 candles into a climate where statistics would suggest 7 days, but instead of 7, it has just keep pushing and pushing and pushing. I mean, of course, there may be fundamental reasons behind it. Everybody is confined at home, or I would say now it's less. Okay, and worldwide, and also in the US is less, but probably in the recent times, many people had to find solutions to get their houses ready for so many days at home without having to go and work in the office. And Home Depot did a great business out of it. So there may be fundamental reasons, or a belief that fundamentally that stock is going to be amazing on the next earnings report and everybody's buying it. And, probabilities are totally, not respected here, where suggestion is 7 candles and it's been 36 already. That's amazing, right? That's amazing. So anyway, so we go for the next one, which is McDonald's. And McDonald's basically is kind of reaching the end of a healthy situation, because a healthy situation based on probabilities would be that we have a climate that lasts for 7 days. And guess what? Today is day 7. So starting tomorrow, we are now entering the time where it's less likely for the stock to continue propagating. Could it continue? Well, we just saw an example with Home Depot. Of course it could. It's probabilities. Okay, but also probabilities tell us what is more likely, and what is more likely is that it's not going to be the case. No matter what happened to Home Depot, for McDonald's, it's not likely. Okay, based on probabilities. Okay, so we don't want to divert the reality of the figures we have in front of us versus whatever our beliefs could be, because we have an unprecedented situation out there. Because even if you were to be right out of your belief, given the unprecedented situation out there, the fact is that if I was to get technical to define or give an adjective to that belief, then I would use the word guess. It's a guess. Okay, so because an unprecedented situation is happening, you believe something's going to happen. So basically, you guess a move is going to happen. And again, if you think about it, the fact that the situation out there is unprecedented means that you don't have any sort of a large sample to justify your belief. It's just an impression, which may come from common sense, and common sense may make a lot of sense. But even though it may make a lot of sense, it's not about our common sense. It's about what the larger market players are wanting to do in the marketplace. And the larger market players, even though they may share your same common sense, they certainly use tools and they rely on statistics to take trading decisions. Therefore, let's make sure, okay, everything I just said, it's just obvious and repeating myself from prior sessions. But I just want to make sure, especially for the ones of you joining the sessions as a new student, I just want to make sure that you all understand that we never deviate from the process, no matter what. Okay, no matter what. And by the way, if the new unprecedented situation basically impacts statistics, and the statistics are going to be different in the next cycle, let AutoClimate tell you that. Don't guess what statistic will be or should be or whatever. Let's rely on the information we have. Okay, that's the bottom line. So I'm going to move to a FedEx. Okay, it's not like it would be wrong to take a trade on McDonald's, but I'll move to FedEx. FedEx, it's kind of a similar situation. Currently, it's candle 7. Probabilities suggest it would be 6 candles into the climate, so we just surpassed already that. Okay, and therefore we are now in a situation where it's less and less likely that the market will continue. So moving into low. Yes, Ahmed, and you're right. We had a trade on McDonald's on 521. You're right. Really, there is a. That's funny, Ruben. I was not aware that we had a watermark turned on the YouTube channel. I'll have to look at that because obviously having an alien on my face is probably not ideal, isn't it? Thank you for letting me know. I'll have to take a look at that. Now, what happens with low? Well, similar situation compared to the stock we saw earlier with Home Depot. We got a climate running for 25 candles where statistics suggest it would be 8. Okay, so very overextended. So again, we use patience. We just keep going down the list until we find what we're looking for. We don't improvise. So here is Nike. Nike could be a candidate for a trade today. Could be because it's 7 candles out of 8. Okay, so I'll make a note. If we don't find anything better, so we'll come back and check Nike. I would prefer to find something a bit earlier on the climate, so we have more time for propagations. Okay, but I'll look at that. I made a note. So Pioneer, Natural Resources, 7 out of 5. Okay, so overextended. Chevron, let's see. With Chevron, we have 2 candles out of 6. Okay, so that is looking much better. Okay, and therefore I would like to pause here and go ahead and put together a trade on Chevron. By the way, I believe, if I am not mistaken, that we have one already. Yes, we do. Okay, we have a trade with Chevron. That was a shorting opportunity. When the climate was a red climate, we put together a spread that was a shorting opportunity. And as you can see, this trade moved against us, and this trade is currently showing negative P&L. Just like the one with Microsoft. That one with Microsoft, by the way, is a long-term investment. I don't know if you remember that. That was a few weeks ago. That was not a trade following the very exact methodology that we are using today. It was a long-term investment where we were doing a very smart application of options in crazy times. This is how the session was explained in the sharpening playlist of the YouTube channel. Options in crazy times, I believe that was the name of the session. So with Microsoft, we did that, and therefore having the negative P&L there is absolutely zero concern. Even though, of course, it's cuter when it's green, but it's absolutely no concern because there is an intention here with Microsoft, which is if the stock drops to the put strike, we want to acquire shares. So no problem. And by the way, very quick, if I look at Microsoft here, I'll do it on TradingView to not to change TradeStation. So Microsoft has been challenging, started making all-time highs twice on May 11. In the past few days, we had multiple attempts to break that and kept falling down. Okay, and there is a collection of green UFOs below where if price goes higher, it's just gonna go through, or it's very likely going to go through because all the on-field orders that were up here that created the move to the downside are gone. Okay, so we are likely going to see that breakout happen as long as the S&P pushes. Okay, of course, stocks are fragile, and if the S&P doesn't accompany the move, then Microsoft will fall, and then we'll acquire the shares at a much lower price. The price we set for that Microsoft trade was 170. Current price is 181. So we'll get Microsoft put to us $10 cheaper, which is nice for a long-term investment. This is not active trading. Keep that in mind. Okay. So Chevron, we have a trade. That was a trade betting on the short side. Let me go back here. Sorry, guys. I just clicked on the wrong place. Here we go. So now Chevron went from the red climate, which is when we took the trade, went to from red to blue. Okay, and it's moving higher and so on. So again, when running trades individually, one at a time, you could certainly be in the situation I am, which is I took this trade, the market went against me, and now it shows a negative P&L, and that's part of trading. And if the spread expires, then I will lose whatever I pay for the spread. If I'm not mistaken wrong, I think it was like $500 if I remember correctly. Now, having said that, this is not what we do. And again, you have collection of videos on the sharpening playlist where we talk about building a portfolio, utilizing gamma hedges, etc., etc. And the reason why that's important is because when you run a portfolio with stocks, especially because stocks are fragile, instead of utilizing stops, it is often a more powerful alternative to run multiple positions in parallel where some are long, some are short. So if one position goes against you, you always have more positions going your way. Okay. So in this case, I don't have any long position. I only have Chevron as a short. Microsoft doesn't count because it's a long-term investment. So forget about that. But if you were to build a portfolio properly, you will have maybe 3 or 4 longs, 3 or 4 shorts, and they kind of start offsetting each other when a market goes against you. And when you reach to targets, you keep collecting profits and re-entering new positions. And this will provide more stable results. Okay. So funnily enough, we have a Chevron position short, and we are now presented with a change of climate to go long Chevron. So it's not my favorite pick, if you wish, because later on when we do the sessions together and it's time to go ahead and review, then here it's going to be a bit confusing because you're going to have Chevron long, Chevron short. So if that's okay with you guys, I'm just going to continue down the list. Hopefully I'll find something better that I could execute. And if not, I'll go back to Chevron because it certainly looks better than Nike, since it's the beginning part of the climate instead of the end part of the climate. Okay. So with Hilton worldwide, we got 7 candles out of 5 or 6. So that's no good. So I'll move into Expedia and see what we got there. While it's loading, I have a few questions here. So let me take a look. Mark, I was stopped out last week of my Microsoft options trade. The premium went down to 152. I got in at 360 and you had a stop at 3. Okay, I got it. So you were placing a stop based on the price of the options. Remember, that was if that was your plan, Mark, it's fine. And by the way, you did send an email to me, and I understand what you were doing. But at the same time, I want to reemphasize one more time that the Microsoft trade I had, it's not to be taken with a stop. It's a trade where you were happy being put shares of Microsoft to you as a long-term investor. So it was not an active opportunity. If you reconverted it to an active opportunity using a different set of time frames and so on, then it's fine. And if you got stopped out, guess what? It's part of trading, so it's fine too, even though it's not the best, but it's okay. But I just want to make sure for the remaining students in the room that your comment about using stops on Microsoft, it's absolutely not related to the trade I have, which is a trade not to be used with stops. This is a trade to be used without stops, given the fact that it's a long-term investment opportunity where the put you sold, you want it, okay? You welcome being put the shares, okay? Okay, very good. So let's continue. Ahmed, should we close CVX? No, you should not close CVX because let me go back to CVX. Okay, so the fact that CVX is going against you, for sure, it's a bad thing. But remember, if you're running a portfolio with multiple trades where some are long and some are short, so the long trades are making money for you, CVX is losing money for you, okay? But here's what may happen. So CVX just hit a red UFO now. So what may happen is CVX does something like that now and really, really falls down very, very hard. I mean, look at what happened to oil just a few weeks ago. So the same thing may happen again. And if that was the case, your long stock positions would suffer. And if you close CVX now, you lose the hedging protection you have with it. So leave it open. It's part of the plan. It's either you get to your target or you lose the premium paid. That's the plan. Okay? We are using debit strategies. Therefore, the premium paid is the most you can lose. So there is no need to use stops or exit the trade manually unless you reach a target. When you reach a target, get out. Take the profit. The trade is over. But if it goes against you, leave it on because it may come back because of new UFOs that form. And if it does, it will work as a hedge against the other positions that you have. Okay. Yep. I get you. Again, if you were to run, Ahmed, if you were to run futures intraday, one trade at a time, first, you would use stops. Second, you're 100% right. Climate change implies get out. 100%. But we are not doing one trade at a time. This is stocks. And when you run when you trade stocks, you better build a portfolio with multiple positions at a time because stocks are fragile by nature. So if you want to trade only one stock position, then my recommendation would be that you utilize an ETF. Use the SPY ETF, the QQQ ETF. Now you have one position only, you go with the market, and whatever it is, it is. But still, I'm not a fan of that because if I look at SPY, for example, Okay, look at the probability stats. Okay, 47%. Okay, if I look at pre-post market, 47% becomes 50%. Okay, great. You got 50% probabilities with the ETF. What about the S&P futures? With the S&P futures, same time frame, you got 57%. Okay, so way more powerful market because it's 24 hours. The ETF is not 24 hours and it has price decay. So not a fan. I prefer to build a portfolio with multiple stocks and build a hedge, having stocks against stocks, thanks to positive and negative deltas, where everything is positive gamma. Okay, and that way you can produce a more consistent result in your account. Okay, it does require a little bit more work, of course, because now you have to manage multiple positions at a time. Okay, good. Okay, Expedia, we got 8 out of 5. Okay, so that will not work. SQ. So what do we have with SQ? We got a climate which is 25, so that's way overextended. Starbucks. So Starbucks, we got 7 out of 8. Okay, so Starbucks and Nike are in the same position with okay to be traded, but not in the best location for climate. Philip Morris. Philip Morris is looking very nice from that sense because because we got 5 out of 9. Okay, so Philip Morris, I think, is going to be the place where I start, and hopefully we'll end up with a trade on Philip Morris. Okay, we got 53% probabilities here. That is above 50%. So that's good. There is institutional interest. What about pre-post market? With pre and post market, there is not enough institutional interest. It's 47%. So I guess that smokers are buying Philip Morris during market hours. Okay, very bad joke, but you got my point. So if any, we will need to utilize regular market hours to plot our UFOs. And I do have a little problem, which is when I look at my moving average exponential, which is 71.69. When I look at 71.69, really I got nothing. Okay, I got nothing. 71.69. It's more or less here, and I have no green UFO. I have no green UFO. So unfortunately, we don't have a valid entry point, even though the climate it's likely going to continue, and would suggest position ourselves long with Philip Morris. Unfortunately, we don't have a good entry point. Okay, so we continue list down TSN. So Tyson Foods. Let's take a look. So we got 2, okay, 2 out of 9. So that is certainly interesting. Probabilities are 49%. That's not good enough. What about pre and post market? That's not good enough with 47%. So we pass. So we're gonna move to a Zillow group. Okay, where the climate is 8 out of 6. So that's too extended. That's an ETF, XOP, STX. So Seagate Technologies. Let's see if people are using hard drives nowadays. We got 7 out of 7. Not so ideal. I'll just keep going, looking for something a bit more ideal, like what we had on Philip Morris. Philip Morris earlier was good. 9 out of 4, no good. What about Altria Group, MO? We got 7 out of 5, so it's overextended. What about MedLife? So MedLife, we got 5 out of 6. So it's kind of like 5 out of 6. Reminds me of Nike and Starbucks that we saw earlier, isn't it? So yeah, so I think I'm just gonna stop going down because stocks are becoming cheaper as we go down. So let me see if I see like a stock which is very, very liquid or something that makes sense. No, all those stocks are lower price point and not especially attractive from a liquidity point of view. So I will pass. Okay, so let's go ahead and go back to Nike. That was our first pick. Okay, we said earlier with 7 out of 8, Okay, so today entering today would still be okay. We will need a UFO around 95. We don't have 95 UFOs here using pre and post market. We have 57%, which is very nice. What about regular session? Do we have a 95 UFO? We have a UFO at 95 right here. Yeah, we do have one. Probability is 54. So that, my friends, is good. Okay, so we do have an opportunity to plan a trade on Nike. I'm curious to find where that stock is. That stock is about or likely going to make all times high. Okay, above or likely going to make all times high. So we have a UFO there, which would be our target. So I'm going to make a note of this UFO. That is 100.55. Okay, 100.55. That is our target UFO. Okay, target UFO is 100.55. So if we enter the trade at 95, and actually the entry would be here at 97.29. So that means that we'll have a profit of around $3 or something like that. Okay, not so crazy excited about the trade. It's not like we have too many picks to choose from because you saw most of the markets are overextended. So that's what it is. But anyway, so let's input those parameters. So we have the target located at 100.55 and the entry is 97.29. Okay, so the bottom value is the entry, the top value is the target. Okay, kind of going from bottom to top. And we're now going to move into the series of expiration dates to decide what expiration date to use. Okay, so from 155, which is the target, to 97.29, which is the entry, we got $3.26. The daily average, as you can see on the bottom left, is $2.67 per day. So we give ourselves 1 week of time per ATR, so that's 7 days. So basically, we're talking about 9 days. Okay, so using an expiration date which is 9 days would be good enough. Okay, and that is 12 of June, 15 days. Okay, having said that, I need to check earnings for Nike. Okay, and earnings for Nike are happening on June 4, which is prior to reaching the our target, which is June 12. In other words, if you enter the trade now, earnings may happen before you get to the target, and you have to exit the trade before you reach target. And we are not into doing that, isn't it? So we're gonna skip Nike, not because of the trade setup. It was not amazing, but that's not the reason. The reason is the collection of expiration dates that we will need to use. So I'm gonna moving into Starbucks, okay, and see what we can do here. So Starbucks, okay, still pending data, so we need to wait. Okay, so it's a similar situation here with 7 out of 8, okay, 733 rounding up to 8. Yeah, Mark, I'm reading your comment. So what do we have? Well, first of all, we got a concern with the probabilities. 45%, that's not good enough. And if we look at pre-post market, it becomes 51%. That is good enough. Okay. So what are we looking for? Well, we're looking for UFOs located around 77.48. Okay. And guess what? That UFO is one of those. Okay. 77. Wait a minute. 77.48 is below. Yeah. I didn't see that correctly. Yeah. So unfortunately, it's not gonna work. Okay. It's not gonna work. It's kind of like half a dollar lower, like 50 cents lower. I mean, it's okay not to be that precise, but again, that UFO is very wide, and if I'm gonna enter here at 78, no, actually this is gonna be 79 or something like that, right? So that's 79.20. If I enter at 79.20, and the location of my EMA is like 77.5, really, it's too much distortion, and I'm just making it up basically. So we're not gonna do that, and therefore we're gonna then end up looking at MedLife. Let me see. Comment from Ruben. Yeah, 23rd of June, 25th of June. Yeah, and we've seen that, and I've seen it many times, Ruben. I believe it was you actually that said it. I think it was maybe 2 or 3 weeks ago, that you had different data for earnings, and since you said it, I just keep seeing that problem, which is not a normal problem, but it has to do with the crazy world in which we are with the COVID-19, and the fact that certain companies are changing dates for earnings, and they are driving everybody crazy, and not all brokers are basically managing to update their databases on times or data sources, and that's a big problem. Okay. So anyway, 5 out of 6. That's what we got with MedLife. Very disappointing probabilities here. 34 or 6. No way we're gonna take that. Let's check regular session. 45. Not even like that. So not enough institutional interest. So then for me to plan a trade to the long side, what a long conversation to end up going back to Chevron. Believe it or not, that's the only stock that really meets my rules. And guess what? Not anymore. Because when I look at the climate now, you can see the climate change from confirmed to unconfirmed. It was not like that before, unless I didn't realize it. But we had a change of climate intrabar, and that means that the climate is not strong enough to basically give us permission to take the trade. Okay, so based on the rules, no trades to the long side today. I will look at the short side in a minute. Before, I want to go back to my scanner to see if the scanner found new opportunities for non-directional trades. We still got Costco, AVGO, we got ECL, we got Baidu. It's the same as before, so nothing has changed, even though I did run the scanner for non-directional. So the last portion of the session, guys, is going to be to look at Pepsi. Okay, and if we have a trade with Pepsi, so great. If not, then we'll move into neutral, and then we will call it a day. Okay, so we are running session shooting for 45-minute sessions long, isn't it? So we got 5 minutes. I'm okay to extend the session a bit, but it's looking one of those days where everything that kind of happened already happened since the prior days. So it's either you are in trades or it's no time to enter trades in these timeframes. Okay, when it comes to intraday trading and everything else, of course, there are more opportunities. But for this particular application is not the case. Okay, so take a look. Pepsi Cola certainly is not going to be a good candidate. Okay, let me show you the climate here. Okay, so first the climate is 6 out of 3, so certainly overextended to the downside. But not only that, you can see it's moving all the way in the opposite direction already. The climate went from confirmed to unconfirmed, because probably tomorrow the climate is going to look blue. Okay, instead of red, the climate is likely going to be blue tomorrow. So again, not a valid one, and in that sense, we will pass on Pepsi. So therefore, let's look at neutral opportunities. Okay, let's see what we've got. With some of those stocks, we may have something to do. AVGO, remember Broadcom was reporting earnings on June 5, so I'm going to pass on this one. So let's take a look at ECL to see if we have a way to make a trade work. Okay. So what do we have with ECL? So we have an up market. We have 2 UFOs, 50%. That's okay. So from that point of view, that's okay. So we're going to load an option chain. And while I'll do that, I'll check the earnings date for ECL. So ECL has earnings on August 4. Okay, so we got plenty of time there, nothing to worry about for ECL. Stock likely going to, or certainly tempted to start making all-time high. So we'll see if that's the case or not. But our attempt will be to put a trade together using June 5. We're going to be using puts. We're going to do a put spread. Guess what? We're not going to do a put spread. Yeah, I really don't like what I see from a liquidity standpoint, guys. Notice 125 and 6, 125 and 550, 5 cents, 340. Not happy to see that. What if we do a monthly? Do we have more liquidity in the monthly? It's better, but it's still painful to see. 180, 390 is like double the price. Yeah, the chart setup looks good. but the liquidity, in my mind, is not good enough. Even though the scanner reported that stock as a valid one based on open interest and so on, the fact is that per strike, the liquidity is not good enough. So we look at Baidu. You have Alibaba as well, marked for short non-directional. Got it. Thanks for sharing that. So 45%, that's not good enough with Baidu. 45% not good enough. So HYG is an ETF. So I'll move into Dell Computers. Okay. Okay. So here is Dell. Okay, we're gonna have to wait for pending data to go away. In the meantime, we'll check earnings. So earnings for Dell will take place on May 29. Okay, so yeah, we cannot do it. We cannot do it. Marvel. Okay, so MRVL. Wow, so many no's today, isn't it? Our job really is to discard more trades than the trades we accept. But again, I'm always. I mean, one thing is during my trading, I really don't care. But when I run the sessions, I do really care to find some opportunities so I can demonstrate for you guys, so you guys can learn, and out of learning, then you can practice on your own. So when we have days like that, it's a little bit of a pain, isn't it? So May 28 is the earnings, so it's today. So no Marvel, and yeah, Trip.com. I will skip that one. So too low price. So let's go ahead and take a look at what Mark suggested. It seems that Baba is a candidate for a trade to the downside. So 3 out of 6, so that's good to open a shorting opportunity. 48.94 is not good enough with pre and post market. So regular session provides 43, so that is not good enough either. And therefore, my friends, we are reaching the end of the session here with basically no go, no go, no go, no matter if it was directional, not directional, or neutral. So what a day. Maybe at the beginning part of the day, there were some opportunities, or later in the day. But as of now, really, our rules don't allow us to execute any trade. And my friends, sitting on our hands is also trading. I remember very well that day last year. You guys may remember if you were there, and if you were not there, you should catch up with that recording. But we had a special session run by Boyan. Boyan, you're there with us, right? Boyan was running a session talking about trading psychology, and he explained very well the fact that not trading is also trading. So I think that this is one of those days where being disciplined, sit on your hands, and make sure that you don't fall into the trap of I want to trade, I want to trade, I want to trade, I want to find something, I want to find something, I want to find something. Make sure you don't fall into this trap, because of course we want to trade, we love trading, we are passionate about it, and that it's certainly a dangerous thing, right? So when the market is giving us a trade which is high probability, then we take it. If it's not, then we are disciplined and we sit on our hands. Okay, so we are doing our job as traders to pass more than what we take. Exactly. Well said. Very, very well said. That's a lesson to be remembered. I conducted a session on Tuesday. I think that some of you joined me on the Tuesday, isn't it? When I conducted that session on the do's and don'ts and trading. And we kind of talked about that. It's very, very important that you guys understand the role of a trader, which is obviously to trade, but only if your rules are met. If not, your job is absolutely not to trade. It's the complete opposite. Okay, so be cool when that happens, even though it's a bit unfortunate when it happens live, because then I cannot demonstrate, and then you don't have a base from which to practice on your own after the session is over. So that's what happened today, and will keep a smile on our face because it's part of trading. So somehow it's still a lesson to not to trade when it's not time to trade. Okay. Anyway, everybody, thank you so much. Yeah, thank you very much, everybody. Super pleasure to join you in the session as always. You guys take care. I will see you next time. Next time is going to be Tuesday, I believe. Yes, Tuesday. And see you then. You guys take care. Stay safe. Bye bye, everybody.